Thanks for clicking. A growing number of Canadians are finding themselves having to sell their homes, forced or not, as private mortgage lenders exit the Canadian real estate market en masse. Private mortgage lending thrived during Canada's real estate bubble, as surging values enabled homeowners who wouldn't qualify for normal traditional financing to access non-traditional sources of funding, to access private mortgage lenders. And with interest rates up and home values continuing to fall, private lenders are increasingly exiting the Canadian real estate market, with more properties expected to hit the market in the coming months.
How good is that?
So what I want to do today is briefly go over how private lending works, take a look at why private mortgage lenders are getting out of the market, many of whom probably shouldn't have been in there in the first place, and then we'll take a look at what to look for next. Speaking of next, it is the end of the month, so we're expecting to get January's real estate data coming out from the local boards starting next week, and we'll obviously have an update out on that data on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into these private mortgage lenders. As mentioned, private mortgage lending thrived during the Canadian real estate bubble. With values increasing, private lenders were more than willing to lend out their money, and the private market constituted about 8.2% of the mortgage market in 2020 alone. The Globe and Mail, in a recent article, interviewed Mark Morris, a real estate lawyer in Toronto, who said that some of those who borrowed heavily against their home equity are now struggling to make their payments. Indeed, interest rates are rising. A lot of private money goes towards second mortgages. So, as the cost of living goes up, as the cost of servicing their first mortgages go up, it's getting more and more difficult for these borrowers to make their payments on their second mortgages. But it's not just the problem of borrowers being unable to make their payments. We're starting to see more and more problems happening at the time of renewal, which I think is going to be more and more of a problem as time goes on. Most private mortgages are for 1-year terms, at which time the borrower is supposed to have lined up other financing, consolidating vis-a-vis a refinance, switching to another lender, switching to a traditional lender, etc. But with a lot of borrowers not making their payments and with values continuing to plummet, a lot of private lenders are refusing to renew, wanting to get their money out of their homes and calling the mortgage.
I think I want my money back.
Indeed, Mark Morris, that lawyer from Toronto, told a story to the Globe and Mail about a couple who had a $300,000 second mortgage, and now it's the end of the term, and the private lender wants their money back. However, at the time that they took the money out, at the time that they took that $300,000 mortgage last April, their home was worth $900,000 and now is only worth $700,000. And this creates a real problem for the homeowner, who now has two options when the private mortgage lender won't renew. They can either sell their home, which could prove difficult if the home is worth less than that which is owed, or they can try to switch to a traditional lender, which could very well be difficult as most lenders will only lend up to 80% of the home's value. And with these homeowners being basically stuck, not able to sell their property or able to find alternative financing, a lot of private lenders are putting these homes up for power of sale. And I think this is going to be even more of a problem now than it has been in the past, as the dramatic rise in home values not only enticed more borrowers to access private lending, but also created a whole new class of private mortgage lenders, homeowners. With home values increasing to such an extent during 2020 and 2021, there was a whole new class of homeowners accessing their lines of credit and trying to get into the private mortgage lending business. At that time, they could access their line of credit for, say, prime plus 2 or 4.45%, and then lend their money out at 10, 11, 12% plus fees. During that time, during 2020 and 2021, I remember receiving between 2 and 3 calls a week from homeowners armed with a line of credit who wanted to get into the private mortgage lending business.
Forget it. This game's not for you.
But private lending for these homeowners doesn't make as much sense as it once did a few years ago. Prime is now sitting at 6.7, so that line of credit, they're now paying 8.7%. If they've lent out their money at 10, 11, 12%, that's not a very great return, especially on an investment that is declining in value rapidly. And as such, I think we're going to see a lot of these private lenders, these amateur private lenders who got into the market during 2020 and 2021 when the going was getting good, I think we're going to see these lenders exit the market. We're going to see a lot of these lenders refuse to renew their mortgages, refuse to offer to renew these mortgages into another term. So we do have private lenders leaving the market. We have these amateur private lenders leaving the market. And as Mr. Morris points out, even when the lenders do agree to renew, the rate and the fee are much higher, upwards of 13% in just interest payments alone. And a lot of this isn't going to show up in the data, as these private mortgage lenders, unlike CMHC, unlike these banks, aren't exactly tracked. They're not exactly regulated. So we're not going to see a slew of data saying that X amount of these private mortgages are going up for power of sale. But brokers are very much seeing it on the ground. With these private lenders refusing to renew, with those that do renew charging much higher rates and fees than they did over the past few years, I think we're going to see a lot more homes come to market. Either forced or anticipatory. We're going to see a lot more homes come to market as this alternative, as this private source of funding that was so rampant during 2020 and 2021 continues to dry up. And of course, this is going to put even more downward pressure on our real estate prices going forward. With that said, we'll continue to track the extent to which this pullback in private lending has an effect on Canada's real estate market on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.